Stocks oscillate in a range after a stronger than expected US manufacturing data tempers rate cut expectation. Consumer durables and realty eke out some gains while IT and metals drag.
The Aditya Birla fashion stock jumps on a move to spin off the lifestyle business of Madura Fashion into a listed entity with mirror shareholding. Value retail, ethnic and luxury businesses will remain with the company in the proposed value creation move.
Mixed auto sales for the month of March. CV sales are weak, but two-wheeler sales with export focus are strong. Bajaj Auto hits fresh record high after strong sales in March. Volumes rise 24% at 346,000 units, while Ashok Leyland sees some weakness in sales.
The Secretary of the Department for Promotion of Industry and Internal Trade tells CNBC-TV18 that there is a case to moderate taxes on hybrids as they reduce pollution, but the concessions will be less than for EVs.
Tata Technologies enters into a 50-50 joint venture with BMW to provide automotive software that the car makers premium vehicles and for digital transformation of its business. The joint venture will start with a team of 100 but rapidly scale to 4 digits. The stock jumps on this news. Good afternoon. It's a Tuesday afternoon on Dalal Street, and it is signs of both shade and sun. If you look at the top of our screen, you will have the Nifty and the sensex mildly lower, where the Nifty bank is mildly higher. The mid-cap index doing a lot better. Remember, we're on a record running spree. Yesterday, the Nifty hit a fresh record high with sensex, so maybe some tempering of gains post that in the overnight news that came by. The mid-caps doing well would make your portfolios feel a lot better on day 2 of fiscal 2025. I'm Mangalam Malu, with me Ekta Batra. Hi.
Hi Mangalam. Yes, absolutely. I think it is a follow-on buying in the broader markets, which the street likes today. So the mid-cap index is up around 0.8%. The BSE small-cap index is higher by around 1%. And not to mention that the advanced decline ratio is positive. Remember, yesterday it was significantly higher or on the advancing side at around 7 to 8 stocks advancing to 1 stock declining. Today it stands at a reasonable as compared to yesterday. 2,700 odd stocks advancing to around 1,080 stocks declining on the Bombay Stock Exchange. But nonetheless, it seems to be a good textured market at this point in time. And just want to point out that there are a lot of stocks which are now at fresh 52-week highs. So Bajaj Auto is case in point. It's the top gain on the Nifty. We have BEL, which is at a fresh 52-week high. Ambuja Cement as well. And from the broader markets, you have the likes of HAL, which is also at the best levels it's seen in 52 weeks, along with something like an Indigo, which is doing well from the aviation space as well.
All right, so let's talk about these individual stocks then. It's mixed auto sales for the month of March. Yesterday, we spoke about a few early trends that came by. CV sales are weak. Two-wheeler sales with export focus are strong. Sonia joins in with some incremental numbers that came by in the course of the last 24 hours and the stocks that are moving around on the back of that. Sonia.
Well, thanks a lot for that. The stock of the day undoubtedly is Bajaj Auto. The stock is at a fresh record high today. The stock has had a phenomenal run. In 2024 already, Bajaj Auto is up 36%. Now, if you look at it, the numbers for this month are very strong, but it's a second consecutive month of very strong sales. So total sales growth has been 25%. Domestic sales is up 18%, but export sales are where the big recovery has come in this time around. And it's something that the management spoke about as well. The management said that the export recovery is there, but it is slow and it's steady. And the numbers that you're seeing on your screen, almost a 40% growth, has come on the back of a low base. They also spoke about how some markets in Africa are still reeling under currency devaluation. Some of the markets like Bangladesh continue to be on the slower side. So there is some time before full recovery in exports takes place. Now, a couple of the other names. Hero MotoCorp, if you look at it, is down, under pressure, down almost about 3% This is because not only have their sales been hit, sales are down about 5.5%, but compared to peers like Bajaj Auto and TVS that are reporting double-digit and 20% plus growth, this is a very disappointing performance, and hence the stock is down about 3%. Let's move on to the commercial vehicle space now. Ashok Leyland has also reported very weak numbers, but the commercial vehicle sector in general is seeing a moderation in growth. So Ashok Leyland's total sales are down by 4%, while the MHCV sales are down by about 7%. Finally, I have TVS Motor on my list. The company reported very strong growth in the month of March, total sales growth up 12%. But more importantly, it's the motorcycle sales growth which has been very strong, up almost about 22%. So mixed bag this time for the auto sector. Good strength in the export-related companies, but the domestic focus or rural-focused companies like Hero MotoCorp continue to be under pressure. Back to you.
Okay, all right, Sonia, thanks very much for that. In fact, we can see it in terms of the stock performances today. Let's stay with something close to the auto space. Tata Technologies has entered into a 50-50 joint venture with BMW to provide automotive software for the car makers' premium vehicles and for digital transformation of its business. The joint venture will start with a team of 100 but rapidly scale to 4 digits. The stock, as you can see, is high on the back of that particular piece of news. Well, in any case, a day after Vistara, we do have Rima joining in to give us more details on Tata Technologies and the news there. Rima.
Thanks so much for that. So as you rightly pointed out, Tata Tech has entered into a joint venture partnership with BMW. Now, the focus of this particular partnership will be, one, to come up with automotive software for their premium vehicles, but two, they also are going to help with the digital transformation of their entire IT business. So that's important. Thirdly, note that the company, this will be a joint venture, a 50-50 kind of a joint venture. While the value of the deal, this partnership is not known, how much it will contribute, but you can gauge its importance by the number of employees Tata Tech plans to staff. So what the company has said, initially, Tata Tech will staff about 100 of its employees on this particular joint venture, but that number will soon go up to 4 digits. That's 1,000 employees plus. So that gives you an indication that the scale up, the ramp up of this deal could be fairly significant. Also, why the street is very excited is that for Tata Tech, one of the big risks or concerns in the market was its dependence on the Tata Group, particularly Tata Motors and JLR. I think it contributes more than about 30% to its overall revenues. Now that when you onboard another auto OEM and a large one like BMW, and you will be doing software for them, you will be coming up with the entire digital transformation. While the value of the deal is not known, the hope is that it will help in bringing down the client concentration risk, and that's also what the street is excited about. Back to you.
And that's about Tata Tech. Rima, thank you so much for that. But let's talk about the other Tata company, which is obviously not listed, but a lot more important to you and me on our daily travels. It's a day after Vistara that decided to temporarily curtail its daily flight schedule. The Aviation Ministry has sought a report from the airline over flight delays and cancellations. Danish joins in with more details on the same. Danish, please take us through.
A day after Vistara came out with the statement regarding the disruption on their daily flights, the Ministry of Civil Aviation as well as the aviation regulator DGCA, both of these bodies have stepped in to address the Vistara crisis. While the Ministry is seeking a proper response from Vistara, a detailed response at what has gone wrong, how many flights are being cancelled and how many of them are being delayed. Similarly, the DGCA has ordered Vistara to submit a daily information report regarding the number of cancellations as well as the number of delays that are happening. And moreover, sources have also told CNBC-TV18 that the Minister Jyotiraditya Scindia himself has stepped in and has asked Vistara and has sought a detailed response from Vistara on the same, that what all has gone wrong and by when the situation will get normal. But as far as Vistara is concerned, as per their statement, Vistara has said that they're trying their best, that whatever disruption is being caused right now, passengers don't have to face much of the issue as they have to comply with the DGCA car norms, which talk about that whenever there's a cancellation or a delay, an airline has to ensure that the passengers are well taken care of and they are either given an alternate flight or they're given or a refund. So all in all, if we see the regulator as well as the ministry and the minister, all of them have stepped in to address this crisis. But if we look at this deeply, this crisis was brewing at Vistara for a very long time. Since Vistara is being merged with Air India, there's certain contractual issues regarding the pilots, and these pilots have been asked to fly for just 40 hours instead of 70 hours that they were flying in Vistara. So because of this, this means that the overall paycheck that a Vistara pilot will earn after it is merged with Air India, it will be quite less, and hence as a protest, these pilots are not flying the aircraft, and due to the crew unavailability, we are seeing that there's a major disruption has been caused for the Vistara passengers. So all in all, if we see, the government is keeping a close watch on this, while the regulator has asked the airline to submit the daily information Commission report, the ministry has said that they have to give a detailed response to them and they have to ensure that whatever provisions are there as per the civil aviation requirements, they properly met and minimal disruption is caused to the passengers.
Okay, all right. Thanks very much for that, Danish. In fact, Indigo is at a fresh 52-week high. Probably, one airplane's loss is the other one's gain. We need to take a short break, but Aditya Birla Fashion and Retail has gained over 10%. It's one of the big stocks of the day after it says it will evaluate the potential demerger of Madura Fashion and Lifestyle business. All the details on the other side. Welcome back. Well, it's quiet for the markets. The financials are a bit sluggish. So ICICI Bank, for example, is down around 1.5%. We have Kotak, which is down around 1.3%. But let's talk about the big stock of the day. Aditya Birla Fashion and Retail has gained over 12%. This is after it says it will evaluate the potential demerger of Madura Fashion and Lifestyle business, which owns brands like Louis Philippe, Allen Solly and American Eagle, into two separate listed entities. After the completion of the demerger, the company plans to raise growth capital within 12 months. How will this demerger fare for the company? Will it unlock value? Mangalam's been doing a lot of number crunching and has been tracking this story for a while. Let's go across to him for more.
Well, ABFRL has announced that they will evaluate a vertical demerger of their businesses into two separate listed entities. As you can see, one would be the Madura Fashion and Lifestyle business. The other one would be the rest of the business. The question we are asking here is if this exercise can actually unlock value. So let's look at this whole exercise and the numbers itself. Now, as per the company's statement to the exchanges, what will each of these businesses hold? Let's start with Madura Fashion and Lifestyle business. It will hold brands like Louis Philippe, Van Heusen, their underwear business, which is growing extremely fast as well, Allen Solly, Peter England, then a couple of these new businesses like American Eagle, the young businesses Forever 21, and the sports business, which is Reebok as well. This demerges and lists separately. The remaining ABFRL business will hold Pantaloons, their vast growing ethnic wear portfolio, the luxury brands that they have, the bridge to luxury brands as well, and a bunch of digital brands known as Tomorrow. So it appears with this that we can classify these businesses in two parts. One is the value generator, the other one is the growth generator. Why do I call them so? Let's start with Madura Lifestyle and Fashion brands. We have a 5% revenue growth for this business. Large part of the revenue comes in 6350 odd crores in the first 9 months of this year, with almost 1000 crores of EBITDA at a margin of 15.5%. Whereas the other business, the fast growing business, grew at around 21% in the first 9 months of this year with a revenue of around 4,500 crores. Of course, because it's in an investment phase, the margins are a lot lower at around 8% itself. If the current growth rate continues with additional kickers coming in from improved consumer sentiment and business focus as well for the next 2 years, for Madura Garments, which has grown at around 5% for the first 9 months of this year, we can assume a revenue compounding of 10% and an EBITDA compounding of over 12% for the next 2 years. And for AB Fashion and Retail, it's a growth driver and we will see some operating leverage as well, which is why I have assumed 22% revenue growth and 25% EBITDA compounding as well. We end up with roughly 11,000 crore revenue and 1,800 crore EBITDA for the Madura Fashion and Lifestyle business for FY26. Whereas for AB Fashion and Retail, the numbers are close to 10,000 crore on the top line with 800 crore on the EBITDA itself. So big question then is how to value these two entities. I'm looking at comparable numbers for companies like Trent. It would be then prudent to ascribe a huge discount to Trent, which trades at 45 times FY26 EV to EBITDA, and give it similar multiples to players like Arvind Fashions as well, and also given a higher multiple to the AB Fashion and Retail business, largely because of higher growth prospects. So look at 20x EV to EBITDA for AB Fashion and Retail and 15x for Madura Fashion and Lifestyle itself. You end up with an enterprise value of 15,700 crores for AB Fashion and Retail and 26,600 crores for Madura Fashion and Lifestyle, which takes the total enterprise value to 42,000 crore as against the 26,000 crores it is at right now. Before jumping to all the conclusions, what are the factors that we should focus on? The first one, what is the exact cash on books post the GIC fund infusion? What the total debt and payables are of the company? 9,300 crore as of September. How will this be split between the two entities? The third one, what is the expected growth capital infusion in ABFRL and the resultant dilution on that? And finally, the path to profitability and growth for both these divisions, how they play out, will be important to see the value that will emerge from this entire exercise.
Okay, all right, Mangalam, thanks very much for that. So that's the big picture with regards to Aditya Birla. Well, just want to focus on Alchem, where we will get more details on that story. But as of now, we do understand that the DGGI has begun an investigation against Alchem. This is source-based at this point in time. And it is basically to do with factors such as input tax credit on expired medicines as well as drugs and claims of wrongful deduction. Remember that there was an income tax investigation which had taken place for Alchem some time ago, and now we're picking up incremental news on Alchem. We'll get you more details on that. As of now, we need to take a short break. Up next, we'll turn our focus on the technicals of the market. Broader markets doing well. How is Jay Thakkar approaching it? More on that once we're back. Welcome back. Well, let's talk about the primary markets. While FY24 will be a year of many things, it was also a year of the IPOs. FY24 saw a diamond jubilee number of companies head to the Lal Street and tap the primary markets. Looking at some data from Prime Database, 75 companies came out with their IPOs and raised over 61,000 crores on a year-on-year basis. This figure is up 19%. But one must keep in mind that the previous year had a mega IPO that was of LIC. So X of that, 19% figure goes to 58%. But here's the interesting bit. The markets went up and away after bottoming out last March. The promoters and early investors wondered why not rake in some money. And hence, this is the result. 20% of the funds raised came from private equity and venture capital selling shares in the IPO. 29% came via promoters selling stock via the offer for sale component. Still, 47% or nearly 29,000 crores was raised in FY24 through fresh issue of equity shares. That number in percentage terms is the highest level in 7 years. Pranav Haldia, the MD of Prime Database, now joins in to talk about what the statistics look like for FY25. Pranav, hi, welcome to the show. Thanks very much for joining in. Well, it's a record year. 76 Indian companies raised over almost 62,000 crores in FY24 via IPOs. Do you think FY25 is probably going to see this continued momentum?
Well, thank you for having me. I think if the pipeline is anything to go by, I think you should see another stellar year for the primary market in 24-25. I think there is some near-term risk on account of the general elections, which will get underway soon. But just looking at the pipeline, of companies which have already filed with SEBI for approval, you have 19 companies looking to raise close to 25,000 crores. Another 40-odd companies looking to raise 50,000 crores, which have applied, to SEBI for approval. You've seen a pickup in filings in the month of March. You had 12 companies filing their offer document. So, the pipeline is steadily building. I think some of the issuers and bankers are waiting for the elections to be out of the way before the issues are launched. But, unless the elections throw up a surprise verdict, I do expect that the secondary market will continue to rally. And as you've seen in the past, primary market activity always follows the secondary market. So you should see some of these, issues coming to the market. And this includes some very large issues as well. So I think 24-25 looks very exciting.
It does look exciting. And, some of the stats, though, however, are telling, even if we raised more than 70,000 crores, Pranav, nice to meet you, just 20,000 plus crores have been fresh issues. So it's not that a lot of this money is going into the companies that are looking to raise funds. The remainder is actually an exit. So how are those funds deployed is the big question. And secondly, the kind of demand that is there for the IPOs, more than 22 of them again were subscribed more than 30 times. What phase of this IPO rush are we in right now with your experience? Last year was strong. Is the next year expected to be stronger? How long before it really, fizzles out, so to say?
Okay, so let me take all these questions one by one. So, in terms of fresh capital, you have seen in 23-24, it's at a 7-year high. If you look at the last few years, OFS component has been close to 80 odd percent, which last year went down to 50%. So, which shows that companies are coming to the IPO market, raising fresh capital to reduce their debt, or for expansion, which is definitely a positive signal. With regards to the second aspect, as far as the OFS component is concerned, where you said that money is going into the pocket. I think this is a sign of an extremely maturing capital market ecosystem. I still remember in the 90s and early 2000s, you had a lot of companies coming to the IPO market purely for raising fresh capital, and they really didn't have any business up and running at that point in time. So of course, there was a huge amount of risk associated with it, and you did see, investors losing tremendous amount of money on account of that. Now, the kind of companies that you're seeing coming to the IPO market are far more mature. You've seen multiple rounds of angel investment, venture capital investment, private equity investment, which has already happened, which also shows that, a lot of due diligence has happened. There are certain governance standards which have, been reached. The companies, of course, reached a certain scale and size. So I think these are, positive signs, and we have to realize that, these investors also need an exit. And these investors need to provide capital back to their own investors, which would then free up some capital for them to invest in the next set of companies. So I think, and if you look at developed markets as well, in US or Europe, this is how, the IPO market really works. So I think there is nothing negative about this. I think there's a lot of negative commentary, which is usually given that this is a pure OFS IPO, so stay away from it. I think there's absolutely nothing wrong in investing in pure OFS IPOs for the reasons which I mentioned. Finally, as far as the demand aspect is concerned, I think the kind of flows that you're seeing, there used to be a time where, IPOs, foreign investors used to play a predominant role in how an IPO would do. That is something which has really changed over the last few years. And domestic institutional investors, especially mutual funds, and with the kind of monies which are coming in on a month-on-month basis, whether through SIPs, just overall AUMs that you've seen of mutual funds expanding, I think that bodes extremely well as well. And, all things considered, I would expect that trend to continue in 24-25 as well.
Okay. Pranav, can you give us a couple of more details and statistics when it comes to the entire SME IPO space? How much or how active was it in the year gone by, and what is the pipeline?
Well, I think SME space, of course, the last couple of years, you've seen a tremendous amount of activity in this space. 23-24, you saw close to 200 IPOs raising 6,000 crores. This is, at an all-time high. Even the previous year, you saw 125 IPOs. I think there might be a bit of a slowdown in this segment on account of, some signaling from the regulator in terms of how they are looking at this. We have to realize and we have to consider these companies slightly different from the main board segment. These are extremely small companies, and even at the time of IPO or post listing, you have to realize that the amounts being raised are very small. Even post listing, the trading volumes, the market cap is extremely small. So high amount of volatility. There is a possibility of manipulation, which of course does remain quite strong. Investors, I would always advise, should be extremely wary before, retail investors especially, should be extremely wary before investing in these companies.
All right. Which is the biggest one in which we know of in terms of fundraise and the brands that we're looking forward to? If you could give us some names in the very near future, the ones that are likely to come?
Well, I wouldn't hazard a guess. Till the time you don't see a company announcing the issue date, one really doesn't know. You've seen several times in the past as well. In fact, even in 23-24, despite there being relatively buoyant markets, you did see about 37 companies which were looking to raise 60,000 crores actually let their approval lapse. So you would think that getting the final SEBI approval is literally the last step before the company launches an IPO. But, you look at the data for the last 10, 15 years, and you find that there are several companies, whether it's a valuation mismatch or, investors are not really interested in a particular sector for various reasons. You do see a lot of companies letting their approval lapse as well. So I won't hazard a guess, but I think, there are some exciting companies, including companies from the new age technology sector as well, from electric vehicles, which are looking to make the IPO debuts this year.
Okay, all right. Pranav, I'm sure we are going to touch base with you as the year progresses. Thanks very much for joining in and giving us all of those details and statistics when it comes to the IPO market. We'll take a short break. We'll get you more on the markets, a lot of stocks in focus, all that and more on the other side.
Welcome back. You're watching us here on Halftime Report. Let's talk about an exclusive conversation that we've had. The government recently came out with a uniform marketing code for pharmaceutical companies to curb unethical practices in the sector. Our colleague Tim C. Jaipuria spoke to the Pharma Secretary Arunish Chawla to find out what regulatory steps pharmaceutical companies in India could face in light of this new framework. Listen in.
It is based on the ethical marketing practices which are enshrined and well accepted internationally through the World Health Assembly. It brings together the MCI regulations which guides the conduct of doctors, the Drugs and Cosmetic Acts which has clear rules and guidelines for how claims and comparisons are to be done, how a product is to be projected in the market and what are the red lines, how it is not to be projected in the market. It brings together the Income Tax Act, the codal provisions of the Income Tax Act, because how an income should be computed, imputed, and what are the penalties for its violation. The UCPMP is a unified codal framework which brings these very important statutes together. And it also leaves it open to what the audit findings are, and it has tie-ups for penal or disciplinary action or remedial measures in terms of any other code, statute, through any other government agency or authority which is relevant to the context. If you go through the code carefully, it mentions certain statutes very clearly and explicitly. It mentions the advertising practices. It mentions the Income Tax Act. It mentions the MCI regulations, loud and clear. What is, if you ask me, this is game theoretic, but I'll put it in very simple words. A reputational play is the best defense against unethical market practices.
You're going to reprimand people for not adhering the code in public. Is it that what you're saying, that if a particular company does not adhere to the code and is found flouting the norms, this department is going to publicize it in public through social media and various other platforms? Is that what you're hinting at?
Loud and clear, and we will not stop at that.
So name and shame is the idea of the penal action over here?
Name and shame is where it begins. The story will go further. We will wait till the end of May for every company to submit their undertaking.
One crucial part here. Will drugs be made more affordable? Will the pricing of drugs and medical devices reduce in the country through this new pricing mechanism? That is something that everyone wants to know. How the deliberations happen, what are these deliberations going to deal with, is something that the common man has left it for you to decide, because you are a key administrative person here appointed by the government to look into it. But what is it that they want to know is whether the drugs and medical devices will be made more affordable in the country or not with this new pricing mechanism. Your word on that.
You have to read the terms of reference carefully. The terms of reference mention that there will be an availability, affordability framework for critical drugs and essential drugs. There will be a price moderation framework for medical devices that makes medical devices affordable while at the same time providing incentives for industry to grow. It will look at new drug therapies, high cost, high margin treatments, which are the treatments of the future, which are coming into the market.
Apart from that, PLI is also something that this department is dealing with. We recently saw news reports saying that pharma has been one of the most attractive areas across the 14 sectors of PLI which were announced by the government. Your views, your comments, how has been the offtake so far?
We should celebrate the moment. Pharma PLIs have been a resounding success. 3 PLIs schemes have been rolled out in the sector, covering pharmaceuticals, bulk drugs, and medical devices. The pharmaceutical scheme has exceeded all expectations. Already 25,000 crore plus of investment has come in, and production targets have been exceeded. Exports have ballooned. And in the closing year, the Indian pharma industry exported more than 50% of its output. Now, that is a big landmark. The bulk drugs and medical devices are difficult schemes, and they have succeeded. Greenfield plants have come up in India, and 50 of them were inaugurated the last month. In the meditech sector, in the medical devices, for the first time, the imports came down in absolute terms. For the first time ever. And exports are growing double digit. That is the best independent evidence that PLI schemes have been a resounding success.
Okay, all right. That's the Pharma Secretary talking about a whole host of issues, including the new marketing code for pharma companies and the fact that they need to adhere to them. But separately, the resounding success of all 3 PLI schemes within the pharmaceutical space for pharma, for medtech devices, as well as for bulk drugs. So that's the word coming in. We'll get you more excerpts of that conversation as we go along. Need to take a short break. On the other side, Manisha Gupta will be joining in.
Welcome back, and joining us on the show now is Kunal Shah. He's head commodities and currencies at Nirmal Bang. Kunal, hi, thank you so much for joining us. And even before I get to the pricing part of it, the street is abuzz with the April 5th deadline when only the commercial players or the hedgers can partake in commodity, rather currency derivatives, and traders would be out of the space. What is the mood right now, and how much of an impact would it have on the volumes?
Yeah, the mood is quite gloomy because of the circular which we saw, and this will only permit the hedgers, the classified hedgers, into this segment. So I think the volumes are expected to dip going forward because predominantly it's a proprietary trader and the retail traders who are accounting for most of the volumes on the domestic bourses. So we are going to see a big drop in the currency derivative volume segment going forward, and the mood is not very great right now, considering that one major revenue driving prospect we are going to see across the all brokers are going to take a hit on this part.
Yeah, well, absolutely. Kunal, so what is the percentage right now between the commercials and the traders?
So I think the rough, we don't have the exact numbers, but the broader, when we did the research, the broader, I think 30-40% of the volume comes from the proprietary traders, around 15 to 20% of the volume comes from the retail traders. And these are the segments which are going to suffer broadly because of this circular going forward. And they may have to, just the positions are just on the, you can close the position, you cannot create the new positions until you are a classified hedger. So it's not a good news.
So, I mean, as you said, with prop and retail put together, would you say that that makes up for nearly 60 to 80% of the overall market volumes?
Yeah. So these are not the official numbers, but
Sure.
this is what the research what we did, and on basis of that, these are the rough numbers what we are getting. So majority of the proprietary traders are going to take a big hit out of this decision.
Kunal, also, I was talking to some of the commodity traders as well. People who are doing international commodities like an energy or gold for that matter, also were trading many of these international currencies because there's a certain hedge mechanism that you have in this area. Do you see a bit of a hit there as well?
Yeah, obviously, because the people who are doing international trading, they will have to, have a currency exposure. They have to hedge their currency. So if they are classified hedgers, I think that they will not have any major impact. But if they are not hedgers and they are doing international trading, which is not legal, then they are definitely going to suffer out of this. So the idea is the same only, that the excessive speculation in the currency, they want to curb down. That may have been the reason. And because of that, this kind of moves have been taken place. But the broader impact on the market of this, because of this step, will be definitely slightly negative from the exchanges point of view, from the brokers point of view. But they must have their own reasons to do this, and they must have foreseen something which is good. That's why they have taken this step.
Sure point that. Kunal, since we have you with us, I also want to sense on the currency itself, because we've seen the dollar index now trade at 105, which is almost a 4.5-month highs as we see it. Well, yes, the data from US has been on the positive side, and that has impacted various currencies, including Japanese yen and euro, Asian currencies, including rupee as well, where we are now almost at 83.20 and past that. How are you looking at the scenario?
I believe that the strength in dollar is going to be very short-lived, and the trend, the directional view from the index is definitely on the downside. So 105, 105.50, I see dollar index peaking out, because the matter of fact is, no matter what is US economic data, no matter what is happening, the rate cuts are inevitable as per our understanding. Because if the rates stay here for the longer, the yields in US will shoot up. And the Federal Reserve cannot afford, because with the rise in yield. So if, for example, there is a 50 bips rise in US bond yield, the interest component, the interest serving component of Federal Reserve goes up by $300 billion. They cannot afford to do that. So if yields are shooting up by 100 pips, then $600 billion an additional amount of interest payment they have to do. And in a scenario where their debt is rising at an alarming pace, they cannot afford to do that. So I think the strength in dollar is going to be short-lived. Markets will at some point, start discounting the rate cuts. We are just waiting for one or two bad data that are enough for crack in dollar index. Right now, there are no major evidence which indicates that US economy is weakening, or there is any bit of weakness. When you printed $3.5, $4 trillion, when $4 trillion are floating around in the ecosystem of the US markets, there is not going to be a bearish trend. So irrespective of what happens, the dollar index is going to weaken. That is our view. And the rates are going to be cut. It's imminent, and it's just a matter of time.
Oh, yes, that's exactly what the street is really waiting for as well. But as you said, on one side, of course, the dollar index is one part of it, but the Indian trade is another one, and the volumes really seem to be dipping because of that, and some concern, of course, coming in for the industry. Kunal, as always, thank you so much for joining in, and that's all the time that we have on Halftime Report. Business Lunch comes up next.